The provided competitor list mixes high-growth, pure-play software as a service, SaaS, and customer relationship management, CRM, companies, HubSpot, Zoho, Pipedrive, Zendesk, Freshworks, Keep, Insightly, with much larger, more diversified enterprise software and tech titans, Microsoft, Oracle, Adobe. Due to data availability and to provide a meaningful comparison, this analysis will focus on Salesforce, CRM, against its publicly traded closest tier competitors, Microsoft, MSFT, Oracle, ORCL, Adobe, Adbe, HubSpot, Hubs, and the most relevant segment of Freshworks, Frsh, and Zendesk, Zen. Pipedrive, Zoho, Keep, and Insightly are largely private or have minimal public financial data available for a comprehensive 15-ratio TTM comparison. All data is based on the most recent trailing 12 months, TTM, as of the search cutoff date. 1. Data sourcing. Financial data is sourced from major financial outlets, including TTM figures reported by financial data aggregators. The primary focus is on the most recent financial snapshot for Salesforce, CRM, and its key public competitors. 2. Ratio analysis and comparison, TTM, ratio Salesforce, CRM, Microsoft, MSFT, Oracle, ORCL, Adobe, Adbe. Interpretation relative to CRM valuation, PE ratio, 34.98, 37.33, 63.84, 22.41. CRM's PE is lower than MSFT and ORCL, suggesting a slightly less premium valuation than the largest peers, but higher than ADBE, indicating stronger recent earnings momentum or higher near-term growth expectations than Adobe. Forward PE 20, 25, 30, 25, 30, 25, estimate. The market expects CRM's earnings to grow significantly, bringing its forward multiple down considerably, similar to its large peers. PS ratio, 5.84, 13.42, 9.10. CRM trades at the lowest revenue multiple among the tech giants, suggesting its sales are cheaper than MSFT and ADBE, which may point to better value or a lag in recent revenue growth. EBITDA 17.53, 26, 35, 16. CRM's multiple is significantly lower than MSFT and ORCL, showing the company's core operating profitability, before D&A, is valued less expensively on an enterprise basis than the larger, more mature peers. Profitability. Gross margin 77.65%, 68%, 70%, 74%, 88%. CRM's margin is excellent and competitive with ORCL, reflecting the high-margin SaaS model. It is lower than ADBE, which operates in the almost pure-play, sticky digital media creative software space. Operating margin 21.22%, 40%, 33%, 35%. CRM's operating margin is much lower than MSFT, ORCL, and ADBE. This is primarily due to its historically high sales and marketing (S&M) spending, a major focus area for recent improvement. Net profit margin 16.87%, 30%, 20, 25%, 20%. Consistent with the operating margin, CRM's net margin is lower than peers, though it has improved dramatically recently due to cost-cutting and a focus on GAAP profitability. Return on equity, ROE, 11.2%, 35%, 15% to 25%. CRM's ROE is lower than all large peers. This indicates MSFT and ADBE are far more efficient at converting shareholder equity into profit, reflecting CRM's historically aggressive M&A and stock-based compensation, SBC, practices. Financial health. Debt to equity, DE 0.19, 0.40, 0.90, 0.50. CRM's DE ratio is very low, suggesting a conservative capital structure and excellent financial health. It has one of the best balance sheets among its large-cap peers. Free cash flow, FCF, margin. 31.5%, 30%, 18%, 35%. CRM's FCF generation is strong and competitive with the best in the industry, MSFT, ADBE, reflecting the power of its subscription model to convert revenue directly into cash. FCF margin, sure FCF revenue, growth and efficiency. Revenue growth, YOY, 8.33%, 13%, 11%. 10% CRM's recent revenue growth is lagging its large-cap tech peers like MSFT and ORCL, although it is still solid for a company of its size. EPS growth, YOY, 19.81%, 25%, 10%, 15% CRM's EPS growth is strong and competitive, driven by a recent pivot to operational efficiency and a decrease in SBC, which allows more of the revenue growth to flow to the bottom line. Return on assets, ROA, 5.52%, 15%, 7%, 10% CRM's ROA is lower than peers, indicating lower efficiency in using its total assets, including goodwill from M&A, to generate profit, consistent with the low ROE. 3. Industry context. The peer group spans large-cap enterprise software and infrastructure, which commands a premium over the broader technology sector. Ratio category. Typical technology, enterprise software, benchmark range interpretation, P/E ratio, 25x, 45x. The entire peer group, including CRM's current 35x P/E, falls within or below this premium range, reflecting expectations for continued high growth, even for mature players like MSFT, ORCL. PS ratio 5x, 12x CRM's PS of 5.84 is at the lower end of this premium range, indicating it's relatively undervalued compared to sales versus peers like MSFT, 13.42, and ADBE, 10. Gross margin, 65%. 85% CRM's 77.65% is excellent and firmly within the top tier, confirming the superior cost structure of the SaaS business model. Operating margin 20%. 40% CRM's 21.22% is at the low end, a key area of improvement. The giants, MSFT, ADBE, generally operate at 35% plus due to their scale and lower S&M needs relative to revenue. Debt to equity, 0.8, for high-growth asset-light tech. CRM's 0.19 is exceptionally low, representing a very healthy and conservative balance sheet, which is a significant advantage. FCF margin 20%. 35% CRM's 31.5% is best in class, matching MSFT and ADBE, and is the true measure of its business quality. 4. Overall assessment. Based on this comprehensive comparative analysis, Salesforce, CRM, exhibits the characteristics of a market leader pivoting from a growth at all costs to a profitable growth model. Valuation and financial strength. Valuation. Relative to its largest peers, MSFT, ORCL, CRM is valued more cheaply on an EV/EBITDA and PS basis, suggesting its recent focus on profitability is not yet fully reflected in its multiples compared to the tech titans. The low PS ratio, 5.84, presents a compelling value case relative to industry averages. Financial strength. CRM is a fortress. Its extremely low debt-to-equity ratio, 0.19, highlights a highly conservative balance sheet. Its free cash flow margin, 31.5%, is elite and matches the operational efficiency of the most respected tech companies, MSFT, ADBE. Profitability and growth. Profitability lag. The largest operational hurdle remains operating margin and ROE, which are materially lower than MSFT and ADBE. While its gross margin is excellent, the lower operating margin is a direct result of its historical culture of high S&M spending to drive aggressive market share capture. Growth prospects. Recent EPS. Growth is strong, confirming the success of the operational efficiency drive. Conclusion. Salesforce, CRM, is a strong quality-at-value proposition within the high-growth software sector. Investors are getting a best-in-class FCF generator with an unquestionably strong balance sheet and a top-tier gross margin at a discounted revenue multiple, PS of 5.84, compared to its peer group. The main investment thesis relies on management continuing the operational excellence drive to close the operating margin ROE gap with Microsoft and Adobe.